the mainstream financial media is 100% complicit in the economic propaganda that the Federal Reserve and other central banks put out. This is not just the case in the US, this is a case in the European Union, this is a case in Australia, this is a case in Canada, and so many other places. We do not have a watchdog media that will challenge people at the Federal Reserve and other economic and political elites, unless it's Trump, because they hate Trump. But the normal, regular people in power will not be challenged or questioned. Let me just give you a quick example of this. I forgot to mention this on yesterday's live stream show. This is going to be an extremely short video. So, Lisa Abramowitz, who is a fixed income reporter for both Bloomberg and Bloomberg Radio, she put out a tweet on April 24th, and this is probably her highest impression tweet she may ever get. And she has, I think, over almost 60,000 Twitter followers, but she almost never gets any interaction at all on her tweets. But this tweet got 123 retweets, 87 comments, including myself, and 248 likes. I don't know why people are liking it. Maybe they want an example of how brainwashed people like her are. But she put out this tweet, and it's just repeating the Federal Reserve verbatim. I'll read her tweet, and then I'll read the article. So it says, U.S. inflation is sliding again, and this time Fed officials may feel compelled to respond with a rate cut. Okay, here's the article, which was by Matthew Bosler on April 24th, 2019, so same day tweet went out. It says, U.S. inflation is sliding again, and this time Federal Reserve officials may feel compelled to respond. After a gauge of price pressure central bankers watch closely finally rose above their 2% target last summer, marking the first time north of it since 2012, it moderated to 1.8% in January, and some forecasters see it heading lower still throughout the first half of the year. I don't know how the hell they see inflation lower. These guys, some of these guys are making 6 or 7 figures. If they're an investment bank chief economist, or they're a chief economist at a private equity or a hedge fund, sometimes they can make even more than that. They're using the official government formulas probably, or Keynesian formulas, to do that with hedonics and substitution, geometric weighting, chain CPI, all this garbage and nonsense. It's garbage in, garbage out. And basically, they're coming up with new ways to hide inflation. Meanwhile, people on Main Street, I showed you guys the real numbers from Chapwood Inflation Index, and the lowest inflation in any of the major cities in the United States that I saw out of like the 15 or 20 top cities in the United States was 8% per year, 5-year average inflation per year in Houston. And the highest was 13% inflation per year or just under 13% inflation per year in San Jose and San Francisco. So, reality versus economic propaganda from governments. And it's not just the U.S. government. China's data is garbage, probably even more manipulated than the U.S., but all these governments are doing it. Japan's doing it. I've been in financial markets now and in the financial industry for a decade. I've heard people saying there is no inflation in Japan. They wish there was inflation. Well, the standard of living, besides technology improvements in Japan, I would say the standard of living for a lot of different things for people in Japan is not improving. In fact, rent is up and food portions are down. There's tons of anecdotal evidence of this. My podcast listeners in Japan send me pictures on Twitter as proof. So let me continue. Sorry, I went off on a rant. Oh, you guys like my rant, so I won't apologize. Okay, went off on a rant. Let me continue with this article. Okay, here we go. Receding inflation could bolster the case for reducing interest rates in 2019, even though worries from earlier in the year about an economic downturn have largely passed. Fed officials have already begun discussing the possibility in public ahead of their April 30th to May 1st policy meeting. Remember I said how the Fed wants to telegraph things. They don't really want big surprises, because that can mean volatility, that could mean, asset prices crashing and panic. Meanwhile, investors are piling into bets that the benchmark federal funds rate will come down later in the year, even as they push U.S. stocks to record highs. Chicago Fed President Charles Evans, who is considered a big dove and an inflationista, hardcore Keynesian, not a moderate, you can't say he's moderate at all, laid out the case on April 15th while speaking with reporters after a speech in New York. Quote, I think the answer has to be yes, end quote, Evans said when asked if low inflation could be grounds for a cut. Quote, if core inflation were to move down to, let's just say, 1.5%, end quote, that would indicate the current levels of rates, quote, is actually restrictive in holding back inflation. And so that would naturally call for a lower funds rate, at least so that it was accommodative, end quote. So basically, they want higher inflation. His response highlights the way most policymakers think about how their interest rate moves affect the economy. They believe people consider inflation when making decisions about borrowing and lending. I would tell you that most people are not that rational. Most people are not that rational at all. In fact, I know tons of people who run businesses who don't understand any of the stuff about real inflation rates or any of that stuff at all. And when they try to hire people who do, they hire a Keynesian who doesn't understand it and uses the government formulas and the Keynesian formulas and all that garbage and nonsense. So it's important to focus on inflation-adjusted interest rates. That means even if U.S. central bankers have the Fed funds rate unchanged, which they have since raising it to just below 2.5% in December, declining inflation effectively constitutes a tightening. I don't know where they get that type of logic, because it pushes up the so-called real rate. Real rates are negative, guys, because the real inflation rate is higher. So when inflation rates, the nominal inflation rate is below the real inflation rate, we already have negative real rates. The Keynesians don't seem to either understand this or they don't seem to care. Could be a combination of both. Depends on the Keynesian. I know some of these, I've had off-the-record conversations with people who have worked at the Fed or worked at very high levels of Wall Street who were chief economist Keynesians, and they have admitted to reading Austrian School Economics, and they do admit off the record that there are problems with, the official government inflation data. There are problems with a lot of the formulas they use, but they are paid to protect the narrative. They are paid to use those formulas. They are highly paid to use those formulas. So even if the formulas are a joke, even if those formulas and the inputs, the garbage inputs, do not reflect reality, they are paid to ignore that and come up with gobbledygook, garbage in, garbage out. Okay, I forgot where I was. Okay, here we go. Okay, which in turn ought to slow the... Okay, I skipped over it. Declining inflation effectively constitutes a tightening because it pushes up the so-called real rate. Obviously, I don't agree with that, which in turn ought to slow the economy and possibly even put more downward pressure on inflation. God forbid, downward pressure on inflation. You mean we should get more for less? You mean we should have beneficial deflation? You mean we should have purchasing power increases? You mean you can't tax that? You mean we shouldn't have higher quality standards of living anymore? Oh, you Keynesians, you freaking scumbags. After their March meeting, Fed officials projected it would be appropriate to forego additional rate hikes this year, which would help keep inflation at 2%. We all know inflation is not at 2%. But some analysts think that inflation forecast is too optimistic. I wonder if these guys do stand-up comedy. I would honestly like to hear them make an argument for how inflation is below 2%. I would like to hear them lay out the case. These guys are making like 6 or 7 figures per year. They have all these extra side gigs, making bunches of money. People are coming to them with consulting gigs. Ben Bernanke is a super highly paid consultant. Like him and Janet Yellen, they get just really expensive hedge fund dinners. I think people were paying... David Einhorn paid over $250,000 cash to have a meeting with Bernanke and thought like, oh shit, he's going to... after Bernanke, they're going to really screw things up. And then there's private meetings of like dozens of hedge fund managers with Janet Yellen for hundreds of thousands of dollars. Just ridiculous stuff. These guys are so divorced from reality. If their bills go up a little bit, it doesn't matter because they have so much money coming in. And someone asked to do like a show on real world, how I can help regular people with the inflation and taxes that are coming. And I've talked about this many, many times. The answer is simple, okay? I've talked about this many times. You need to figure out ways to grow your income or revenues, which means you're going to need an extra job. You're going to need a side hustle. You're going to need a side business. You're going to need to find a new way to grow revenues to offset inflation, stagnate and lie, or worse, and taxes increases. Remember, even if there is no inflation, even if asset prices crash, the politicians are still going to figure out new ways to either increase the taxes that are already on the books or layer on new taxes. This is the new normal that we are in. It freaking sucks, but you are going to have to figure out new ways to adapt and change. So that means working with friends and family members to figure out ways to maybe come up with a side business or a side hustle. Pool your skills. If one person, your friend or family member is good at one thing and you're good at something else, maybe figure out a way to work together to build a side business or a side hustle. This is what we're going to have to do to survive, because the people in power are going to lie, and they're going to steal, until this system totally crashes. Well, or socialism, or full socialism. Anyway. Okay, let me get back to the article. I think I've got one more paragraph. Nope, there's more garbage here, sorry. If that prediction proves correct, the downward drift will come amid an official review of the current strategy for hitting the 2% inflation target, which was announced late last year. Officials believe inflation expectations are key determinant of actual inflation. This is only part of it. So there is real inflation. The Austrian school believes that money supply and credit supply eventually leads to higher inflation rates. But other economic schools believe that it's all about velocity of money. The velocity of money increases are where you start to get hyperinflation. So the Fed, the Keynesians mistakenly think that if velocity of money increases, that they will only get a little bit more inflation, but things don't. It's like the analogy Jim Rickards uses about turning the dial with like a thermostat versus turning the dial at a nuclear power plant. So the Keynesians think that they could just turn it up 1 degree, like on a thermostat at your house, but that's not how the economy works. So if velocity of money, which has been collapsing for a long time, starts to actually increase, and we do have some wage growth in the system, and wage growth to me just means, more misallocation of capital. It means higher prices in the supply chain, and it means more stagflation coming. So it means less for more for a lot of the consumers. So either businesses, if politicians are forcing higher wages, businesses could shut down. You've seen countless examples of this with restaurants and the minimum wage going up. It has unintended consequences. But those wage increases will start to go into the supply chain, and they will force prices higher, and you will get less for more. Okay, the gauges. I'm skipping towards the end here now because I really shouldn't. Okay, Daly cited 2 gauges. These are more Fed presidents arguing that they want to drive inflation higher, but only in certain categories of goods and services. Daly cited 2 gauges developed by San Francisco Fed economists, which divide up the items in the inflation basket based on whether or not they are sensitive to cyclical pressures, and help explain, so anything that goes up in price, they just take it out of the measurement, right? They've been doing this for how long, and they just do this accelerating, and help explain why inflation rose last year before coming back down again. The gauges show that the inflation rate for such cyclically sensitive items has been flat for the past 2 years and remains well below levels achieved in previous expansions. The inflation rate for other items, which is harder for policymakers to influence, jumped last year before sliding again in January. To the extent we've got low inflation in an environment with sub 4% unemployment, I think that's indicative of the fact that we don't have an active Phillips curve in this environment. My God, the Phillips curve has been disproven. The Phillips curve is how we got stagflation in the first place in the 1970s. They're still citing it. They were saying that, the Phillips curve, if you're not aware of this, was the assumption that high unemployment and high inflation could not occur at the same time. And stagflation in the 1970s totally disproved this. It totally disproved the Phillips curve. And here you have the academics still citing the Phillips curve. I forgot to quote the exact St. Louis Fed President James Bullard there, but the fact that he's talking about the Phillips curve shows you how behind the curve he actually is. The other channel, quote, the other channel you need to look at is inflation expectations, end quote, he said. Those don't look that good either, and so I am a little concerned about this. So they are actually concerned, guys, that inflation expectations are not higher. They want inflation expectations higher. They want more inflation in the system. This is the dystopian world we live in, where these central bankers put out garbage economic propaganda in every major country, and then the mainstream financial media in every major country just totally lies. The mainstream financial media, you cannot have an honest conversation with them. This Isabella Kamenska woman she works for a couple of these hedge fund publications. I got in an enormous Twitter fight with her years ago. She literally worships the ground that Larry Summers walks on. And I said, you realize even though this guy's smart and he's the president of Harvard, he has literally, in his writings have been on for decades, he has literally been wrong all the time for the last 30 years. And she went nuts on me on Twitter. So she's around my age. She's in her low 30s, and apparently she loves this guy. It's an unhealthy obsession. Exactly, Jesse. Inflation is theft. Taxation is theft, and inflation is theft. Inflation is more covert. One of the few things about John Maynard Keynes, I will agree with him, is that not 1 in a million people can actually understand inflation. Thanks, Rainmaker. I'm glad you like some of my videos. This is return-free risk. Your posts are great. Inflation is going lower if you exclude the cost of food, energy, housing, healthcare, tuition. How about consumer staples, man? If I go to Target or Walmart, I can tell you for a fact that since when I was in college and since I graduated college, the prices, this is like 12 years later, 13 years later now, since I graduated college, the prices are double. So what used to buy me, what I used to get like a basket for $50 or $60 now costs like $130, $140. And the cost per unit is up. So what these consumer staple companies do is they might keep the price pretty similar or only increase the price a little bit, but the cost per unit is up a lot. So you're getting a lot less for more money. And that's how you look at the cost per unit. And a lot of grocery stores and Target and Walmart often put the cost per unit there. I think Costco does it too. And this is called shrinkflation. Yep, shrinkflation, exactly. One of the listeners put that comment section. We do have a super chat today. Thank you very much, Boiler Room, for the $5. I appreciate it. That's a beer. I'll pour one out for you later. I'll take the fiat. I'll take the fiat for now. I have to work on getting my Bitcoin donation things fixed on my website. It's not working right now. Okay, well, that's it for today. I just wanted to do a rant on that this is a blatant example. If you want a laugh, go look in the comment section below this Lisa Abramowitz tweet. It's probably the most interactive tweet she's ever going to get, considering how boring a lot of her other posts are. There's just some hilarious comments there. It's definitely, if you want some giggles, there's a lot of people commenting there. I think I commented below the article or I quoted the tweet. I can't remember. Maybe I did both. Okay, guys, well, the new normal, as you guys know, in real life and reality, the government economic data and statistics are not going to say this, is stagflate and lie. Stagflate and taxes and lie. And like I said, if you can find a city and a state in the United States that is actually focusing on drastically reducing the taxes, and we know that the Trump tax cuts are going to be temporary anyway, because as soon as the Democrats gain more control of Congress, as soon as the Democrats put a president back in there, we know the taxes are going way, way up again. And even though we did have some benefits from the Trump tax cut, some of us actually got some benefits, some small businesses did, that the state and local governments did not cut taxes. In fact, they're going up a lot. I've heard stories from people where they got like an 8 or 9% increase just in a year. On a bunch of things. Not just one thing, like a couple of different things. Okay, guys, well, that's it for right now. Rant over. Everyone have a great rest of your weekend. And I saw Avengers Endgame late last night. I thought it was excellent. And I'm excited to see what happens in the Game of Thrones battle tomorrow night. Plus or minus, 50 people dying? Okay, guys, everyone have a great night. I'm going out to dinner now, and I will pour a beer out. Thanks for the $5 super chat tip.